Dear viewers, welcome to this episode of Your Life, Your Money. A lot of things have happened in the last 1 month, and it is appearing that it is changing the course of the economy. In this episode, I am going to discuss to you what might happen in the next 12 months and how, as an investor, you should position yourself. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, it is very easy to comment on looking at the past data, how the future might unfold. This is the cardinal mistake people make, the commentators make, or the planners make. You study the past, it's a rear view mirror, and you derive certain lessons from it and try to extrapolate the same into the future. But the future always plays the game. Future is always uncertain. The experienced financial planners are always prepared for the future and they expect things can go wrong. What happened in the last 1 month or so? We saw this Israel war in the Gaza Strip. It was never expected. It was not there on the cards. It came like a black swan. And it is showing the signs of it is changing the course of the economies across globe. In this video, I'm going to examine the various facets of what's happening because of this war and what are the things that we are seeing right now, what might unfold in days ahead. I would like to add a disclaimer here. Number one, this is my judgment. This is my opinion. This is an individualistic opinion. This opinion is based on my time that I have spent in the market. But it doesn't mean that the future will behave exactly like what I have said. So you don't have to take it with utmost seriousness. Take it with a pinch of salt. And based on the historical fact and what I observed in my lifetime, I'm going to talk to you about how things might unfold. But nevertheless, market has a mind of its own. Let's respect market, whatever it does. The first is the war we are seeing in the Gaza and Israel war right now, whatever seeing. It has severe implications. It looks like Gaza is a small strip of land and the war might close within a short span of time. It looks very unlikely. It came as a surprise and it is already engulfing many countries around that particular place. Today, US has got involved in it. The surrounding countries like Iran, Lebanon, Yemen have also got involved in it. There are other countries which are supporting or trying to douse the fire. A lot of things is happening around this war. One thing which is happening for certain is the destruction of infrastructure, wastage of resources which normally have to be utilized for progress of the humanity is used for war purpose. When a war is waging, which side it will take, how long it will prolong, what all the consequences it will follow, these are very, very difficult things to predict, but it will have its consequences. So when the war is there, it's a situation which is not normal. So the way to handle it is being cautious is the right word when the war is raging. Now this war is not between two countries. This is about ideological war and what world has seen in last 20-30 years, and it has reached a point where it cannot be tolerated anymore, and we are seeing the consequences of that. A very interesting thing that I am observing in the marketplace is we are seeing a lot of inflection points. And interestingly, all these inflection points are coming simultaneously. Inflection point number one, US is behind its best days. The dominance of US, what it used to command in the past, probably may not repeat in the future. So its dominance is slowly but steadily is on the downside. It will have its effect on the economy as well. The days of printing money it used to do like the way before is also not possible today because of the raging inflation and because of which the interest rates have been kept very high in the US. So the US doesn't have a scope to print money and prop up the market. So that's not possible. US is showing signs of slowly slowing down, and obviously it will leave a mark on the global markets. What's happening in the China? China was the fastest growing economy in the world during last 10, 15, 20 years. What is very interesting about China is it grew so much but its stock market is stuck at a level of around 3,000 on the Shanghai Composite. Chinese market made a peak in the year 2007-2008 where it hit 6,200, and thereafterwards, literally 15 years of growth, the stock market is half the value what it recorded in 2008. It goes on to say that just a growth of an economy does not mean that it will result in stock market gains. And China today is behind its peak as well. Its growth has slowed down. It is succumbing to the excesses that is there in its economy, like the credit, the excessive dependence on real estate, lack of information, not treating the businessman with the due respect and care. The Chinese themselves are not investing within China. Rather, they are moving their profits out of China and investing in real estate in Canada, Ireland, UK, US and various other places. So the China also appears to be something which is not driving the world growth today, and it has slowed down. If you look back at home, India is also passing through an inflection point. The inflection point in case of India is a positive inflection point. It has done a lot of reforms in the last 10 years. It has gained a lot of momentum because of the various reforms which happened after 1992. There was a period of lull in between 2008 to 2014, but from 2014 onwards, again, it has gained momentum. And today we are at an inflection point where India is going to really take off. So one inflection point which we see in the world is India, but this inflection point is on the upside, whereas every other inflection point I am observing is indicating the market turning downwards. The other inflection point is that of terrorism. World has lived with terrorism for quite a long time. The Mumbai attacks, the World Trade Center attack, attacks in different parts of the world, what happened in France recently, what we observe in UK, what we are observing today in Israel, all indicate that world has become tired of terrorism. It's a time where the concerted effort from different corners of the world will unite now to conquer the terrorism. How it will happen, how long it will take, what all the destruction it will take place, will it be able to conquer terrorism fully, or will it remain as a chronic disease for the world economy for a long period of time? Only the future can answer. But the war on terrorism has started, and it is raging across different countries, and it is not restricted to a couple of countries. It will also have a soothing or a negative impact on the growth prospect for the world. The other inflection point I'm observing is de-dollarization of world trade. World has observed and depended too much for too long on our dollars. And when the dollar becomes strong, it has so much of a negative impact on weaker economies like the emerging markets, the African economies, the South American economies. Wherever the economies are weak, when the dollar gets strengthened, they will go through a real life-threatening problems. So the world has recognized this, and there is again a concerted effort to come out of this dependence on dollar. De-dollarization is a working phenomenon right now. Again, we do not know how much time it will take, what form it will take. One thing is certain, world is taking definitely new strides towards de-dollarization of world trade. For a stock market to move fast forward, what is required is clarity. What is required is a trigger point, something which makes investors feel that, look, economy is taking off now, let's commit more money into it, and that's how the money flows into the economy. All the events that I told you till now are an indication that the investors are seeing a hazy picture in the front. They have no clarity. They are not able to see one single trigger because of which they see that the world economy can really grow, and one more new bull run will start from here. Look at the US market. US markets made its peak somewhere in October 2021. Now literally 3 years have crossed. The Indian stock market has come out of the previous highs it recorded up at about 62,000 on the Sensex, and it went up to 67,000. Whereas in case of US, be it S&P 500, be it Dow Jones, or be it the Nasdaq indices, they have not crossed the previous peaks, which means to say for last 3 years they have remained in bearish market, and the present situation only tells it is very unlikely that they will cross the previous highs anytime soon. Probably we have to wait for more months, and even I will not rule out more years before the US will take out the previous highs. Now let's also look at the calendar of events which are lined up for coming months. We are in the month of November now, and next month is Christmas. It's obvious every year around Christmas period, most of the years you see that the market's coming down because the fund managers will book their profits. They get their bonuses because of the profits that they have made, and it's obvious that they will try to protect their profit and they will sell it. It's also possible this year too that the markets might correct around a Christmas period. That's something that we can expect from the US markets. In case of India, we have a general elections which are coming up in the month of May 2024, and it's hardly about 6 months to the general election. A lot of activity is there in the Indian election scenario right now. There is an attempt to unite the different opposition parties, giving a hope that Mr. Modi may get defeated. Whether it happens, whether it will not happen, will Modi be back there? Will there be a stable government? Will he get the required number of seats to form a stable government? Only the population can answer it with their votes, and we have to keep our fingers crossed. But nevertheless, the investors are very careful until the election results are out or more clarity emerges around that. I do not think the informed investor or the smart money is likely to chase the Indian stock market. But for any reason, if this government gets elected all over again, and it will have a stable government and it has the required numbers, it is fair to expect that markets may go through a re-rating process immediately after the election or just before the election. A re-rating is markets discounting what might happen in the next 5 years, and the markets will going through a spike up phase. So this is what you can expect from the Indian market. At this point of time, any indicators we are looking at does not show that this government may not get elected for the next time. That remains a distant possibility at this point of time. But elections, nobody can predict anything. Anything can happen from now till the May. So I will keep my fingers crossed, and we only hope for the best from an investor's perspective. So what to expect in the next 12 months? I don't expect any fireworks in any market, including the Indian market. You may see markets moving up for 2 days, then markets coming down by 2 days. Market may get stuck in a trading range. Probably it could get stuck in a band of 62,000 on the downside, 67,000 on the upside, which is the previous peak. It may languish there for a long period of time. But a raging bull market at this point of time looks unlikely. India is doing very well. The numbers are very good. Everything that's happening in the India at this point of time calls for a good unfolding of a bull run. But India is also following the global economy. It is interlinked to the global economy. When the entire global economy is going through a turmoil, slowdown, difficult phase, India will also face the headwinds. So finally, what happens in the Indian stock market is a sum of the positive things that happen in India and the negative things that happen in the world and the investor sentiment that will reflect in the stock market. Probably it's fair to say the next 6 months to 12 months could be a period of lull, not to expect too much of growth in the Indian stock indices as well. As investors, what can you do? Number one, we have always believed this. We cannot control the returns. Returns are not under our control. We can control what we can control. What is that you can control as an investor? How much money you can save, that you can control. How your investments have to be placed. Should it go into a fixed income? Should it go into commodities? Should it go into equities, mutual fund? Whatever it is that you can control. In a nutshell to say, you can control the process. That is what you need to control. The second thing is, when you invest, you don't invest for next 6 months, next 12 months, next 3 months. No, that's not what's investment. That's speculation. When you invest for reaching your life goal, which could be your retirement, which is decades down the line. Your children's education could be 10, 15 years down the line. Could be for wealth creation, which has an unlimited period of time. If you're a long-term investor, only two things will matter. One, how have you put asset allocation in your investment metric? Second thing, how long you are prepared to exercise your patience. Are you a person who becomes jittery when you see slightest volatility in the market? If you are a patient person, if you have got your asset allocation right, you have nothing to worry about. Do not worry about what happens in the short run. Just do not worry. You think, where could the Sensex be 10 years down the line, and that would always be a positive number from here onwards. And the patience pays in abundance. That's what you need to know. A word of caution for do-it-yourself investors. For those do-it-yourself investors, you would have been very complacent now because of what happened post-pandemic. You saw from markets moving all the way from 27, 28,000 on the Sensex. You saw 67,000. It's like somebody thinking that I know I've conquered the market. Now, next few years will test your knowledge, it will test your patience. You will change the funds thinking that this fund is doing well, that fund is not doing well, and you might churn your portfolios, but that will not work in your favor. This is the time the real advisors will come to your rescue. There is a way to build your portfolio. You should build a portfolio keeping all scenarios that might unfold in a marketplace and design your portfolio. Try to do it. If you cannot do it, take the help of an advisor. For those of you who are looking out for an advisor's help to build your portfolios to reach your life goals, you can make best use of services provided by the experts which are associated with NRI Money Clinic as well. If you have an intention, all that you have to do is send us a WhatsApp message. Our number is shown here in the description box. We have also given a link over there. Click on the link, it takes you to the WhatsApp. Send us an introductory message and our team will take over from there and put you across to the right professional to take you through this journey of investment. So why delay? Send that message now. Dear viewers, hope the video that I have done today helped you to understand what might happen in the short term of next 3, 6 or 12 months period of time. It did give you a direction. It also gave you an idea about how you have to position your portfolios. Please do give me a thumbs up. Do not forget to share these videos with your friends and relatives, near and dear ones, and on all the WhatsApp groups on which you are communicated. I shall be back. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another thought on your life, your money next Friday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.